Good morning, everyone. Happy Hump Day. We have decided to move our live stream to Wednesday. Tuesdays have just been a little slow and not great for live streaming, so hopefully Wednesday's a little bit better. Last night was pretty flat. I mean, they were up and down a little, but mostly sideways. No like major move. We're going to open basically flat on both major indexes. The RTY is going to be a little bit red, and the Dow is um, slightly red as well. So basically flat. Nothing jumps off the screen like, oh my gosh, can't believe we made this kind of move. You had a little bit of a gap down, and then they've kind of closed that gap since the midnight hour here. So you have yellow and blue here. Blue is after hours until like midnight, and they call it um, after hours trading, and then they call this pre-market trading here. The yellow from midnight on or midnight up to the open. A few things. If you are new to the stream, welcome. Thank you for being here. I do appreciate it. Um, we are going to be going through our IWJ Pivot Point Pro today. We're going to be demonstrating it, the buys and sells on the screen. As you can see, yesterday was a really nice day. We got the buy signal right at the bottom, and we took profit here at the sell signal. Once and we did try to take this sell, but then that one didn't work out. But this big giant winner here, small loser, and then you understand after that that it's a trend day. We teach you how to identify a trend day. Essentially, it's when they break over the pre-market high and they hold over the 21 the entire day, which they did. The blue line here is the 21. The black line is VWAP. This indicator is a trading view only indicator, which means you have to have a trading view account to get it. And you can see on the screen I do have some codes. I generally don't discount the yearly. I know I've said that a lot, and we've actually discounted it a few weeks here, a few different times. I'm doing it today because I wouldn't normally have done it today, honestly. But I am moving. I am in the process of moving, and I know that the next week of content is going to be a little bit lacking. I won't be able to get the free videos out as often. I'll get some out, but it won't be daily like normal, and I just won't have the time. So I wanted to offer something in return for that, for me not giving you the content you want and need and deserve. So I am giving a 10% discount on the um, yearly indicator, which again I don't do very often. So if you want to take advantage of that, you can do so, but it will only be a live. That coupon code will only be valid during the live stream. Let me do a couple of things here. One, I want to refresh this because we need to get our new levels up. If you do want to, after you watch today, if you do want to get the indicator, there will be a link. There is a link down in the description that will take you over on how to get that so that you can sign up. I'll show you how to do that here in just 1 second. So all I'm doing now, these will update these mentor levels. So I want to make sure I get them updated so that I get the right levels on here. And then if you click that link, it'll take you to our membership plans page. And if you scroll down on the membership plans page, you'll see our indicator right here, Trading View Indicators. It's $59 a month, but you can get 30% off of that if you want to try it out off your first month. And then it'll be normal price after that. It does come with a 30-day money-back guarantee. So if you use it and you're unhappy, simply let me know, and within 30 days, and I'll get your money back. You do get a better price on the yearly. You get 2 months for free, essentially, because you're paying for 10 months to get 12. If you want to use the coupon, you click the Get the Indicator button there. When you're signing up, go all the way down here to the bottom, and it says have a coupon right here. And you just put in yearly 10 and hit enter, and it'll say coupon applied successfully, and at the top it will show you that it was. So you can see right here, terms 1 year for $531, then $590 a year with coupon after that. So chance to get a discount on it. Like I said, I don't offer discounts very often. I would not have offered one again for a while, honestly. But again, I'm moving. I know that my content's going to be lacking for the next week or so, and I wanted to give you guys that to kind of offset that. So take advantage of that if you can, or if you want to. You can also get our TradeWaves Academy, which if you scroll down, if you get the yearly indicator, you get TradeWaves Academy 50% off. And TradeWaves Academy is everything not Elliott Wave related that we use. So it's going to be psychology, capital management, options trading, candlestick patterns, how to trade price action, bull and bear traps and spotting them, market reversals, fib levels, key support and resistance, and trade setup. So all of this is included in TradeWaves Academy, and you get that for half price. So if you, instead of paying $24.97, you pay about $250. I think it's like $248 and change or something, $248.50, I guess. So all of that is there. So just to give you a kind of an overview of all of that, that is what we're advertising today. When you do go to the, if you do buy the indicator, you will get a, you will get to this page. And just make sure you read all the instructions. I get so many people that don't read the instructions, don't use it right, and then don't understand what's going on or have a lot of questions because they didn't read the instructions. Please make sure you read these. It's really important. It tells you what to do right here. Fill out the form, wait for access. It can take up to 24 hours, 48 on weekends because I'm not watching my computer on the weekends. Watch the videos below for instructions. You have an account page, and then so it tells you how to cancel and change. I don't hide anything. I'm not one of those people that make it really hard to cancel. If you don't like it, that's fine. Move on. We can both move on and go our separate ways. I don't peddle get rich quick, and I don't try to make it hard for you to do anything. I want you to be happy. That's all. I'm here to make traders happy, and if I can't do that, no worries. I can't make everybody happy, but I do want to yeah, let me do that. Hold on one second. Let's see if that helps. Oh, probably too much. Is that better, Maxime? I'm not going to make everybody happy, and you're not going to like everybody. So if we don't get along or you don't like what I have, no worries. Just cancel, get your money back in the 30 days or whatever. But again, all we teach is very, very good trading habits and patterns, and then the indicator gives us our edge. Right here, it tells you exactly what accounts you'll need. And I give you a link that gives you a discount on TradingView. So if you don't have a TradingView account, don't sign up for one until you get the indicator. And then you can get a discounted TradingView account by clicking this link. Full disclosure, TradingView does pay me for that, but it doesn't mean you don't get a better deal. You're going to get a discounted price too. So we both win. You get a discounted price, and I get a kickback from TradingView for having you go to TradingView. And then it gives you the videos, how to set up TradingView, excuse me, how to set up the indicator, set up day trading strategy, your trend day strategy. So this is how you identify a trend day. And we also have a strategy for it for aggressive players. Full disclosure, I don't use this strategy, and I tell you that in the video. And then our weekly swing strategy. So everything is in there that you need. And that's what we'll be demonstrating today for the most part. But while we wait for trades to occur, I will go through training and different things. We do like to identify our key levels before the market opens. So let's do that real quick. We are on the SPY 5-minute chart. This is what I use for day trading. The indicator can be used for any stock, any index, Bitcoin, gold, whatever you want to use it on, it can be used. You just have to set it up properly, and I show you how to do that in those videos. But essentially, you have to change these two tickers. So if I was going to trade gold, for instance, GLD, I would want to click on this and just type in GLD. And the gold comes up. I click on that, and it changes to gold. And I need to do the same thing with ticker 2. The reason these tickers are the way they are when you're set up is because this is set up for the SPY. One second here. This is set up for the SPY, but you can set it up for anything. ES, it doesn't matter. Like I said, any stock. But the SPY, when we're trading the SPY, the ticker, the indicator is also looking at the ES and the NQ, because it wants all three markets to be in sync when we get a buy or sell, because it's much more likely to fire and win. So those set up that way. That's why those are set up that way. And that's why you need real-time data on the ES and the NQ. The pre-market and post-market, we don't trade this. It's too choppy. There's not enough volume for the indicator to work properly. It looks at about 150, 170 things. And they are weighted. So it might say a high volume level is 10% weight, and volume on that level is 10%, and a moving average is maybe 2%. So that's how it factors in what's more important. And then when all of those things factor to a certain score, it gives a buy or sell signal, and then we go from there. So our key levels right now, we have a pre-market high at 592.09. We have a pre-market low at 589.49. Those are going to be some important levels. Yesterday's close is important, 591.06. And the weekly high here at 591.31. It looks like it's hard to see. There's a couple lines there. And then we zoom out a little or move the chart so we can see a little better. Our call resistance is at 595. Our first high volume level to the downside is 590. And 588 is going to be our second high volume level. My put support is non-existent today. So we don't even have a put wall on here today. So that's an interesting thing. I haven't been able to look at the levels like I normally would. Put support is here. I'm sorry, I didn't see it because usually it's in different color. Put support is with the second high volume level here at 588. So market makers like to keep it in between the put and call support. So they'd like to do this all day. And that's kind of what we take advantage of on a lot of days. Because if they get below this put support, that means they have to hedge to the downside. That's what causes waterfall effects. If they get above this call resistance, they have to hedge to the upside. That's what causes squeezes. And so they don't really want to do that because it's a lot of extra exposure for them. So they like to try to keep price if they can in between these levels. So those are great levels to trade off of. And the indicator knows that and very often provides data based on that. So lots of information there. I hope that was worth it. We've got about 13 minutes here. Let's go through our counts real quick. Nothing's really changed from last week, even though the market shot higher. I talked about it in the video. This is very capable of being a bracketed wave forward. Came down to just above the gap and has shot higher. They are at or above the 764 retrace. So the bulls are fully in control now until or unless we see a 5-wave move down. That would start to break down into these areas. We need to break 5,600 to tell us we're in the bigger pullback, which is what we're looking for overall. So short term, bull path can be a wave 5 up towards about 6,010 or so. Bear path, we're looking for some kind of pullback. If that pullback is corrective, we're going to look overall for all-time highs. And if that pullback is impulsive, we're going to look overall for a bigger breakdown, where they come up and break down. NASDAQ's going to be exactly the same, and NASDAQ is the more bullish overall structure. They are back at these highs. Basically, they are through the 764. They are targeting 21,633 on this move up, which would be this 5 over here. It just needs to move over. This 5 of 3 there. Okay. So bull path in the short term on the NASDAQ. We're looking for this move up into the 21,800, 21,633 area. And then we'll see what happens if they're going to turn down from there. I still am looking for a bigger pullback before they go to all-time highs, if they're going to all-time highs. Again, that pullback would be corrective and then back up. Corrective means 3 waves. And then if it is impulsive, we'd look for the 5-wave move down and then a bounce and then a breakdown. So that's what we're looking at on the counts for the charts. And overall, just to recap for anybody who joined late, we are demonstrating IWJ Pivot Point Pro on this live stream as we normally do. We are giving discounts on both the yearly and the monthly. We never discount the yearly or rarely discount the yearly. I am discounting it today because I am moving, and I know that my content is going to be very lacking over the next week. So to make up for that, I wanted to offer you guys a discount on the yearly price to make that better. And you also get the 50% off of TradeWaves Academy if you do that. The coupon codes are at the bottom. They do expire after the live stream, so make sure you take advantage of those. It's going to be really important that you do that because you don't get those all the time, and they do expire when the live stream ends. All right, let's look at some comments real quick. Maxime, you just got the yearly? Awesome. So what I'll do is I will, after the live stream, I won't do it right now, I will cancel your monthly and refund you a prorated amount on whatever you've paid on your monthly. And that way you don't double pay it on month at all. Love your videos, Jacob. I have been watching you for 2 years now. Awesome channel. I am graduating from my PPL in June and will be buying your course soon. That's awesome, Christian. I thought that said Christian Bale at first, and then I was really excited. Even though I don't like him, it'd still be cool to have him on my stream. And the only reason I don't like him is his Batman voice. Is that not ridiculous, by the way? That you put on a mask and now you have to talk like this. It's ridiculous. Drives me nuts. How do you add CME on TradingView? So they have packages, and I think, let me go to my account. I don't think they show too much if I show my account on here. Products, I believe. Supercharged calendar. Option. Oh boy. I think I clicked something. Oh, I went back to my super chart. Let me try that again. I want to put this on a different tab anyway. Account and billing, I'm guessing. I haven't done this in a while, so bear with me. I've had this for years set up, so let's see here. Save with an annual, manage subscription, account and billing notifications, profile. Pricing. Maybe it's pricing. So under products, I went to pricing. There you go. Okay. And then I think if you scroll down, institutional data. Maybe I missed it. Plans compare markets maybe. Yeah, here you go. Okay, so it's under markets, and then it's the CME group, E-mini included right here, futures, and it's $7 a month. So you go to products, pricing, and then you go to markets and, what did I go to? Yeah, I think market. Maybe I can just click markets right here and do it. No. Okay. Products, pricing, markets, and then you can go back and watch it again. I'm not doing it again. Okay, let me get set up here. We're in a sell right now. So you can see you have a sell. Actually, you have a sell stop right here. So we're not in a sell. We are. Okay, they're setting up a 5-minute squeeze right now. Looks like to the downside. So we may come into a buy cycle, actually. So if I know we're going to come into a buy because we have a sell that's already printed and we're coming down, I do want to get my chart and my everything, my trades, everything set up for a long on the options. And that way I'm not spending a whole bunch of time trying to get my trade set up so that when the trade does happen, I'm ready to go and I can get in at the best possible price, because sometimes price moves really quick. And sorry, I had to move my screen. Sometimes price moves really quick, and if you're not ready, you can miss price by several %. So you maybe could have gotten in for $1, but instead you get in for $1.20, and that's 20% higher. That's a big miss. So you want to be within 3 to 5 cents of whatever price the sell signal comes in at if you can. Obviously, sometimes it's too hard, it's too fast. There's been times I've missed trades because it just moved too fast. But I'm always set up and ready to go so that all I got to do is hit buy, and I'm ready to get my trade in so that I can not waste any time doing that. Okay, I need to come over here now. If you are in my group, remember there is a delay on the stream, so you're gonna want to be in Discord so you can get the trades as fast as they happen. Otherwise, if you're watching on the YouTube channel, you're going to be waiting. Okay, I'll be right back, guys. I just want to grab something to drink because I'm usually on here for an hour and a half, and I'll be right back. All right, so I'm back. Do your profit loss numbers include swing trades profit loss? No, that's all day trading that we show on there. Just because the swing trades are so few and far between, but I mean, I could put them on there. I can go back and round them up pretty quick. If you're interested in my room and you're not in there, some things that we've done, say in the last year, last April, so about 11 or 13 months ago, I told my guys to get into gold or precious metals. I gave them a precious metals fund for their 401ks. So I wanted them out of the S&P and in gold. The S&P over the last year has been basically flat. And gold is up. That's not exactly true. It was flat when it was down around 5,000. But the S&P is up, a little bit, and the precious metals fund is up over 60% on their 401k in just a year. So we protect your money. We find places for money. Yes, we day and swing trade. That is the core of every day in the room. But we also protect your long-term investments so that when market crashes hit, you're not blindsided and you're in the right place. We just took a lot of profit out off of our precious metals fund. And I can actually open that real quick. We're getting ready to open, so I'll be quick. So the fund was EK Wax, which is a precious metals fund. And we got in April of 24, which is right January, February, March, April, right here. It was at about 49 when we got in. And right now it's at 84, so it's actually up more than 60%. We took profit at just above 80. So 60% on your 401k is pretty solid if you're interested in things like that. That's what we do in my room. Okay, we may get a buy signal right out the gate here, so let's be ready for that. And there it is. We're going to get 592 at 188. And our stop is going to be 591.30. We are trading into the pre-market high, so that could be a little bit of a tough ask for him to get through, but we'll see. Ah, they got us there. So we'll stop at 159 on the first one here. Got one right out of the gate. Sometimes those are good, really good, and sometimes they are quick stop outs. So if they reissue the buy signal, we will take it again. That is just kind of how it goes. Sometimes you get a little bit of chop right out of the gate. Sometimes, though, you get that gap and go, and it's really nice. So we'll see what they give us here as we move. They really only stopped us by a penny. They tested yesterday's high. So 591.06 would fully close the gap. So it was a little bit tough. They traded right into the pre-market high, which you would expect to be some resistance here, and rejected. So not fully unbelievable that one didn't work out. Now they're going to go back and test it again, and now it's a much more effective trade, really. There's a reissue on the buy. We're going to take it at 178, and we're going to have we're going to lower our stop to 591.25 on it. We'll try it one more time here. The indicator clearly thinks the market wants to move up here. It's just a question of if it's going to move directly up or take a minute to kind of consolidate and then go. But the indicator is usually pretty good at understanding when consolidation is about to end and the move is about to happen. And this is a base case for trading 101. And I didn't talk about stops and trading, what do you call that? Trading plan, our trading plan. Sorry, I'm getting a little brain dead here. So what we do is our trading plan while we're watching this go is we have, this, let's just call this middle line our entry, and then this bottom line that I'm drawing a stop, and the top line is our first profit, which is 20%. We take profit at 20% for half of the trade. And the reason we do that is we have our stop here. So if we get stopped out, okay, that's going to happen. You're going to lose trades. Get used to that. We have these wins. So we take our first win, and this generally cancels this. So our small wins cancel our stop outs because they should be small as well. And then when we get the trade right, our runners are basically all profit. So these small losers are canceled by our small winners. We take half the trade at 20%. And then we let the runners run. And all we do is apply that over and over again. People think you should have to win 7 out of 10 trades to make money in the market, and that's just simply not true. Okay, they're back at the pre-market high here. Our first take, we have 35 cents basically, so that's going to be 213 would be our first profit take on this. if your risk reward is right, you don't have to win even more trades than you lose. I know a lot of traders who only win 3 out of 10, 4 out of 10 trades and are very, very, very good traders because the style of trade they take is basically they have a very small losing window. So their loss risk is small. But if they're right on their trade, they're going to make 3 or 4 to 1 on that trade. And so they only got to be right like 1 out of 5 times to make money. So if they're right 3 out of 10, that's 1.5 out of 5, which means they're making money. So the amount of winning trades you have is actually irrelevant. It's about your risk reward and what kind of trade setups you have. Now, can you set up any risk reward to make it look like a great trade setup? Sure, you could say 1,000,000 to 1, but you got to be realistic and you got to understand your targets and why those are your targets and all those types of things. So trading plans are really important. Anybody who tells you they win 90% of their trades are taking probably trades that are poorly set up for risk reward. In other words, they're like a 1-to-1 trade, meaning I win $1 when I win and I lose $1 when I lose. So it's a break even. Whereas my trades are generally you win $2 or $3 when you win and you lose 1 or less than 1 when you lose. So it's about 2, 3 to 1, maybe a little bit more than that. So it's all about understanding risk reward, following the rules, not getting bored, not over trading, and knowing that you have an edge that you apply over and over again. And then that edge pays off over time. There is no get rich quick scheme in the market. Have people gotten lucky? Sure. But those people also probably ended up losing that money. Because if they hit one lucky trade, it probably wasn't the first time they tried it, and it probably won't be the last. You shouldn't have all your capital in on any trade. You shouldn't be trading more than 5% of your overall capital on any trade. And then when you stop out, you're only losing about, maybe 5% of that 5%, because you want to be able to fight tomorrow. You want to be able to play tomorrow. It's the only way to build accounts. All right, they're trying to move up here. They are above VWAP in the 21, which is good. They're trying to get through the pre-market high, which is good. Looks like they're about through here. If they do, we should see a little bit of a push. We don't have any major resistance until 595, which is $3 up. So, that's a very valid target. It's really a question of this area right here. Can they get through the pre-market high? What if we don't get a pullback and continue to all-time highs? Then we're at all-time highs. That's the whole thing, guys, is it's just probabilities. You're just playing what's the most probable thing to happen. And if it doesn't happen, okay, no worries. We trade the highest probability setup. So all I do is all Elliott Wave is, not what I do, it's what Elliott Wave is you observe the market. You look at the key levels, you look at the structure, and you say, what is the most probable thing for the market to do? And if you think about what the market can do, the options are really limitless, right? It's an infinite number of paths the market can take. But what Elliott Wave has shown us is that generally we can narrow that down to 2 or 3 paths. So if you take infinite down to 2 or 3, that's pretty powerful. And then if you know what key levels to watch for to confirm your path, hold on, we're about to take profit here. I want to make sure we do that. Okay, we're going to close half of our trade for $2.13. And we're going to set our stops to 180. So indicator was right on at the start. It wanted us to get long. We had our stop just about a penny off. I think we lost that by a penny on the first trade, which is really stupid. Let me get this updated in the room for everybody else that's not on the stream, guys. Give me 1 second. All right, stops to 180. There we go. So all we do is we observe the market, and We get 2 or 3 paths. Then inside of those paths, we look for trade setups. So if I'm looking for the most probable path to be up, I'm not just trading for that. I'm not just like, I think it's probably going to go up. I want confirmation. So I want to see a setup, something like, if we're coming off a low, something like this, where now I have something to trade off of. I have a stop here. I have a target wherever the target is. And now I have a trade setup and I have a little bit of confirmation of the most probable path. If that doesn't happen, I don't trade it. So everybody thinks, oh, Elliott Wave's stupid because you're going to lose money and you don't know what you're doing and there's 2 paths every day and blah, blah, blah. That's simply stupid. That's not an accurate statement. It's simply lack of knowledge. If the primary path is up and we break support and then I see something like this, well, now I have a trade set up to the downside where I have a stop here and I have a target down here, wherever the target is. I'm just drawing a line. So it doesn't matter what the market does. You can say, what if the market goes to $1 billion? Then it goes to $1 billion. It doesn't matter. That doesn't change anything. It just makes the path you're labeling wrong. So while Elliott is a great forecasting tool, once you have some parameters in place, in other words, once you have kind of a 5 or 3 wave structure in one direction, then you can start to forecast what targets will be up here should they continue to follow that path. That doesn't mean you were right about this 1-2. This could be something else and you have to relabel it. Everybody says, oh, you see, you go back and change it. Yes, because I was wrong. Being wrong is okay. It doesn't matter. That part of the whole thing is irrelevant. It's all about making money. So all I'm looking for is a trade setup that kind of confirms the path I'm looking for, or one of the paths I'm looking for, and then I take the most highly probable trade I can trade. And that allows me to win a lot of trades. So when people say what if, starting on an Elliott Wave comment, the answer is yes. Or can it? Can it be? What if it? Then it does. I mean, there's no repercussion to that to me. It just is what it is. We don't always have the labeling, right? And Elliott Wave, there's no textbook that you can go to the back of the textbook and say, did I get my answers right? You just have to take it as it comes, and you do the best you can. And sometimes the structures are really hard, and sometimes they don't follow the book, and you're really kind of waiting for more information because you're kind of in the middle of a zone. But overall, it is a tremendous advantage to take infinite paths down to 2 or 3, watch for key levels, trade setups off key levels. That's all you're doing. And that's all you should be doing. It's not about trading because you're missing out, FOMO. It's not about trading because you're losing everything, FOLE. It's not, everybody trades off of fear when you should be trading off of setups. So there's fear of missing out, there's fear of losing everything, there's fear of being wrong, there's fear of being, all these different things. What you should be doing is going, is this the most probable place for the trade to do this? Actually, all you should do is ask 3 questions. Why am I entering this trade? What factors led me to enter a trade? Now, for me, on day trading, it's always the indicator because it's calculating all the factors in the background that I would normally calculate by hand or by looking, and I would miss a lot of them because there's 170 being calculated. But on swing trades, which it also calculates on weekly, so you have those, but on smaller swing trades, I enter some of those as well, and we're just taking the most high probability setup. That's it. So why am I entering this trade? What caused me to think the market was going to do X? Is it reasonable, or am I just bored? All right. What is my target, and what is my stop? So if my target is 1 point higher and my stop is 1 point lower, that's not a valid trade. If my target is 10 points higher and my stop is 2 points lower, that can be a valid trade. That's 5 to 1. That's a good trade if that's what you're looking for and that's what your rules say or whatever your trading plan is. There are a million trading plans, really infinite trading plans as well. You can trade, iron condors. You can trade options. You can buy and hold. You can sell options. I mean, there's a million ways to trade. Whatever your trading plan is your trading plan. Some people don't like options. Some people don't like buy and hold. Some people don't like long-term stuff. Some people like, whatever. So you got to be comfortable with what you're trading and then just trade good setups. That's all trading is. The idea of being right or wrong about the market is 100% irrelevant, especially on a single trade. You should be looking at, over the course of 100, 200, 500 trades. How did I do? Am I doing good? Then I might have something here. Am I doing bad? I probably need to adjust. Everybody gets so worked up about winning 10 cents or losing 10 cents, and it's 100% irrelevant if you are trading properly. All right, let's see if they're going to melt down here or find support and go. They poked above, so this can be a failed breakout, especially if they come back below VWAP in the 21 here. So we got to keep an eye on that. Our trade's going to potentially stop out on the second half here. We'll have to see. I hope all of that made sense. I was rambling for a while about trading because the idea of what ifs and can I's are completely irrelevant to me. They don't make any difference. Okay, so now we got to sell, so we got to drop out. So we're going to go close our trade at 186. These are where it gets hard. So we take profit. If we're in a long and we see a sell signal, we go ahead and take profit because more often than not, it's telling us the market is getting weak. Now I got to set up a short here if I can. This is where it takes long to get into a trade because you're not ready for it. So as long as we get a decent price, we'll get into this. Right now they're holding VWAP, so it's a tricky area. Market, the indicator is seeing some weakness, but the market is still holding VWAP. So 592, and we are at we're going to get in at 180. And our stop is going to be 592.65. So we'll say 70, 592.70. Okay, so we have a 592 put. Price 180, stop 592.70. I'll get the average exit in 1 second on that other one. Okay, so we are short now. Trade alerts. What's our profit going to be? We got in with 36 cents, so 216 will be our take here. And our last average exit, we had 186 and what did I say, 213. So that is 90409. So our average exit is 205. And let me update that here. Okay, and now we're moving down. What's our price? 210. Oh, we're almost there. What did I say it was? 216? There it is. Close half for 216. Another winner in the books. And we'll set our stops to 180. There we go. Wednesdays are better. Oh, just kidding. It's one Wednesday. All right. Sorry, there's a lot of updating going on in the room here real quick. I got to make sure everybody who's paid gets all their information. Darn it. So a lot of people think, so we closed half for 216 there, which was 36 cents, right? People say, oh, why would you be trading for chump change? Well, or pocket change or whatever. Do you know that if you're trading 25 contracts a trade, which is what I trade based on a 100K account, so if you have and this just scales down, guys. It just scales down. So 100K account, you're trading 25 contracts per trade. If you make 16 cents a day, average, obviously you're not going to win every day. If you average 16 cents profit a day, that's 100K a year. 100K a year is not chump change. Not to me, anyway. All right. We are coming into the kind of support area. So right here is going to be a support area just because of the structure of the chart, but they're pushing through it, looks like. It's yesterday's high, and they battled it for the last few hours. So if they get through that, they should come down and test first 590. That's going to be our high volume level, and the pre-market low is 589.50. So these are our next two levels. My next profit take is going to be down around this 590 area because we should see a little bit of a bounce off of it, even if they're going to continue lower. In most cases, not all the time. When they sell, sometimes they just break through everything. Hey, Will. Sorry, I haven't looked at the comments in a while, guys, because these trades are coming hot and fast and furious. We are going to move our stops to 190. I will get to the comments in just a second. I know there's some questions in there. Just give me 1 minute. Stops to 190. And do that here as well. So I keep my trailing stop at about 50 cents. And then just depending on how volatile the day is, sometimes I make it a little bigger. So they got to 240, which means my trailing stop at 190 is about 50 cents. And then I take profit at key levels. So this is a high volume level. So I want to take some profit here because if they're going to be a choppy day, it's very likely we do something like this. Oh, something like, there we go, this. And so I don't want to take that 50-cent loss when I can take profit off of this high volume level and see this likely bounce. And that's okay. And if they spike this lower and move it back higher, I get 10 extra cents here. Well, 5 because of the, we sold half the trade, but you get the idea. 10 extra cents on the second half of the trade. First strike, you have 2 more for today. Not anymore. We're 2-1, buddy. I know you're kidding, Daniel. I'm just kidding also. How do you distinguish what swing trade to enter into and what not? Pure Elliott or other tools? So some Elliott, some price action, some key levels. For me, it's more than just one factor. One of the big things is, so let's say this was a hourly chart. Even if it's not, it's still a high volume level. So if we come down to this put support and the Elliott wave count calls for higher, and this is a major setup or a major support level, and you come up and do something like this off of that, that's a pretty decent setup because I have a place to stop out. I have something to trade against. If they break below this high volume level, then they're probably going to continue down for a while. And I have a setup where they're going to make a high, a higher low, and then hopefully a higher high. And then I can start to trade this move up and then take, some profit maybe up here at this level because it's resistance, wherever the level is. I'm just giving you an example on the chart. But it's not just one factor. I also have the indicator weekly that I use. So if you look at the weekly signals on the indicator, those are very good indications of swing trades. For instance, down at around, well, we can just look real quick. I'm in the middle of a trade, so I hate switching charts, but I'll do it real quick since we've already taken some profit. So if you look down here recently, there's a little glitch in the indicator. I think we have it fixed now. The coding there's something going on. But at any rate, you got this buy signal down here on the weekly, which came in at about 566. So it comes in at the bottom of the candle. So that doesn't mean that the buy initiated at the bottom. That's just the candle it came in on. And on the weekly, we always take the high. Well, we always take the end of the week so that the signal doesn't change. And they immediately pushed it from what I said was 566 to 599 or something, 595. So a 30-point move straight up in a couple weeks is pretty solid. And they're, right back there still. They're well above this candle. Trying to push on it. So you took profit up here, obviously, or you should have taken some profit on a 30-point move, but I used that as well. That's not what I want to do. I want to go back to the 5-minute chart. 5-minute right there. So there's a lot of factors that go into a swing trade. It's not just one thing generally, unless it's the swing, the weekly indicator I use for swing trades and as a one thing entry. In other words, I only look at that thing for that particular entry. I mean, you get the signal from the indicator, but you don't trade every signal. No, I actually do. I actually do. Oh, I like how you spelled Wednesday there, TPK. That's good. Wednesday. All right, let's see if we can get a runner here. We'd like to see them. They kind of came back and back tested this resistance. They're still fighting it. I'd like to see them kind of have the bottom fall out here and come tag this 590 level. That'd be perfect. They may back test the 21 first before they do that, but ideally, we'd like to see them just kind of drop the bottom here. Guys, remember, I don't discount the yearly indicator that often. You are getting 10% off of the yearly. It does come with a 30-day money-back guarantee. With a caveat on that, by the way, if you've had the monthly indicator for 4 months and then you just bought the yearly, obviously you don't get the 30-day money-back guarantee. You know how the indicator works. You know everything about it. You've had it for 4 months, so you don't get to double use the guarantee, I guess, is what I'd say. But if you're new to buying it, you get a 30-day money-back guarantee. So you do have that 10% that I just don't give out that often. Again, I'm moving this week, so my content's going to be a little light. So unfortunately, that is what it just has to be, and I wanted to give something to you guys in return for that, so I gave you 10% off the yearly, and then 30% off the monthly. If you just want to try it out and you don't want to commit to a yearly price, or you can't, commit to that, I understand completely, but you can get 30% off of the first month, and you still have your 30-day money-back guarantee to kind of bail you out if you don't like it. And if you just follow the rules, guys, you'll be so excited at the end of a year. And 1 year is not that long, especially if you have kids. You'd be surprised at how fast you have a 7-year-old when you thought they were 1 yesterday. All right, there we go. Let's get some follow through here. Boom. So the whole point of the day trading indicator is we're looking for 7 to 10 ES points, which generally gives us that 20%, and we're looking for that with potential. So the indicator looks for moves that it thinks will hit those types of numbers with some potential, meaning it's 7 to 10 points is what it thinks it should be able to get, which gets you the 20%, but it has potential to hit 20, 30, 40, 50 points, depending on what setup it's in. So that's how you get these kind of small winners right here. You scalp, 20% winner, 15% winner, whatever this one was. Might have been a little less than that, but right around 10 to 15%. And then you get a little bit of a runner, and you can move your stops and do better there. Shoot, we did hit 250, so I'm going to change my stops to $2. We might have even hit more than 250. I was talking there, but stops to $2 here. And if we can get a little follow through, that would be awesome. What was the low on this candle? Was it 30? Oh my God, they hit our stop on the penny. How terrible is that on the first trade? That was probably my fault. The yesterday's high was 531.30. I should have probably gone like a nickel under that, 531.26. So the first trade, my stop was 531.30. That was exactly the low of this candle. And then they went up and we retook the long and won the trade. But we had to take a small loss first, which we didn't have to take. That was probably my fault. But okay, so so the reason I'm going back, this isn't to beat on myself and be like, God, you suck, what an idiot. This is to learn from my mistakes. So when I go back and I look at this and I see yesterday's high was 531.31 and I'm just trying to get these trades in quick, all I had to do was take 1 second, look at yesterday's high, see that it was at 31, make my stop just a little bit lower than that. I did 30. It should have been probably 25. That extra nickel isn't going to cost you that much in option price, and it's going to protect you from a key level spike through, which is exactly what they did by a penny. So that's it. You want to go back and analyze your losses, because you want to see where you can improve and how you can improve. Because everybody makes mistakes. I make mistakes. That's part of life. But if you don't learn from those mistakes and you don't go back and learn why you made a mistake or how you made a mistake, you'll just keep repeating that same mistake. So you have to learn from yourself as well. I highly recommend trading journals. Mine is my group. I have a day trading, what I call a room, where you get all the day trades, and that's all that's in there. So at the end of the day, I can go back and look at all the trades on the chart and in that room, kind of see what made sense and what didn't, and where we should have changed things. And, that helps a lot in future trades where I tell myself, what did I do there? I didn't go. It's not that I didn't know this. I know that. I went too fast. So slow down, because I'm trying to get the best price. I'm trying to get the information out to everybody. And so I need to just slow down for a second, make sure I get the right stop so that I don't lose a trade I shouldn't have lost. So this should not even have been a loser right here. But I'm also very disciplined and unapologetic with my stops, meaning they hit the stop on the penny. So I stopped out. I didn't wait to see what would happen. They hit my stop. I stopped out. That's it. It's the end of the conversation. Because if you go, what's going to happen? And they flash down, then you're like, okay, they'll take it back. Oh, they flash down again, and then they're gone, and you've lost 50 cents that you shouldn't have lost. That's a lot. And if you make that mistake more than once, it's a whole lot. So I'm unapologetically disciplined on my stops. Other people are like, oh, I won that trade. Well, you didn't honor your stop, and that will cost you in the future. That just reinforces bad habits when you do things that are out of the rules. Moving sucks, still on the West Coast. Yeah, we're going back to Washington. Which on that note, if you're listening, don't ever use bellhop. What a miserable nightmare experience that was yesterday. I had movers come in there, a moving company, and I had them come in to pack and load my moving trucks. And the movers, don't get me wrong, the guys they sent were great, except they didn't send enough of them. I ordered 3. They sent 2. The third guy showed up 4 hours late. They called me an hour before and told me that what I ordered they couldn't do. And literally an hour before I was going to move, which sent me into a panic because I have painters coming today, all this different stuff because we're selling the house and everything. It was a nightmare. And when I called to tell them it was a nightmare, they yelled at me and told me that I was wrong and I ordered it wrong. And then I showed them on the website what I did, and they were like, oh, well, you didn't ask question. Anyway, this long story short, don't use bellhop ever. Tell all your friends that. I hope I put them out of business. I'm just kidding. I don't hope I put them out of business, but pretty frustrating. And I really don't like customer service where people just aren't going to try to make it right. Anybody who's ever had a problem with my room, my product, or me, that's legitimate, I do whatever I can to make it right. Because refunding that person or giving them the discount or whatever it is that is reasonable is going to make them so much happier and not badmouth or YouTube comment on me or anything else, and be so much easier on me. And it's like, a small portion of the money I make is my business to keep somebody happy. So I don't understand why businesses don't do that. But anyway, side note, yes, Will, we are going back to Washington. We had our house here, so we came back here, and me and my wife have a bunch of friends here, but all of their kids are older, and Bobby had her grandma and grandpa and her cousins and everything in Washington, and she really liked it there, and kids get to dictate what you do if you love them. So we're going back to Washington. What's the biggest winner you've ever had on a day trade based on 25 contracts? Well, it's interesting. That's pre or post being a professional trader. Because pre-trading, I did a lot of stupid things, blew up accounts, but occasionally got lucky. Post being a professional trader, I don't know. I think we had one that, I guess it's been a long time of doing this. I think we've had one that maybe was, our stop was 500% the cost of the option at the time. Now we had obviously taken profit down through there. So I think 500% is the record, where like if it was $1, if the option cost $1, our current stop for the last part of that trade was $5. which probably was like a $3 winner or something. So what's that, $7,500? Probably something like that. You shouldn't have, unless you just get one of the market days that's insane. But because you should be taking profit at key levels along the way, you shouldn't have necessarily life-changing wins if you're day trading properly. Unless you're, I mean, there are people who have really aggressive day trading strategies, and those are fine. So their strategy would be, hey, we get in at the top like we did, and then I ride it down until it hits this level, and my stop never moves from up here. So they say I'm willing to either hit this level or stop out. And those work on, high volatility days, and they're really looking for 4 or 5x their money on that, with their stop being maybe fairly small, so they don't have to win a ton of trades. That's not how I trade. I trade level to level. So we get in here, we take profit at 20%, and then whatever the next key level is. For me, there's really not a whole lot to stop them from getting to this 590 level. So that's going to be my next take profit target. If they stop me out, they stop me out. That's just what it is. But I'll continue to move my stops down as they move down so that I don't lose all of it back. So it's really hard to get like a life-changing win. But like I said, if you average 16 cents a day, trading 25 contracts, that's $100K a year. You don't need to go to college. You need to have YouTube. That depends. That depends on what we're talking about and who you're talking to and who you're following on YouTube. But there's a lot of smart things on YouTube, and there's a lot of stupid things on YouTube. So I will defer to use your own judgment. Speaking rules, when is your next podcast? I'm going to try to record a few this weekend. I'm basically now, this weekend I'll be sitting and waiting for painters, so I want to try to get 2 or 3 recorded and release them. And then they should come out basically weekly after that. That's the goal, to record one a week. So hopefully I'll have one recorded for the next few weeks. Just been a little bit hectic with the move, so that will become a more regular thing. Do you take a trade if the signal flashes and disappears? I take the trade as soon as the signal flashes. So if you go back and watch the beginning of this video, we got a trade. They came down. I just talked about it, stopped me out by a penny, and then it came back on. So I took the trade again, and we obviously got that winner. And then we turned around here. As soon as this sell flashed, we took it. It kind of flashed on and off for a second. But you take it as soon as it comes. And all of those losses that occur, so let's say it flashes, a sell, and then it does this, and the sell goes away, it's not on the chart, and you took the loss. All of that is still in all of my documented trades. I don't hide any of that or say, oh, you didn't see it. Now, what I don't do is I don't talk about those on YouTube. And the reason I don't, it's not because I want to hide those. It really isn't. I talk about them on here all the time. I don't hide from them. It's that I can't prove winners like that. So I can't talk about one side of it, right? So if I say, hey, this went down and went back up and we took a loss here, but it's not on the chart, it's confusing. And if I say, oh, we actually won right here, you don't see there's a buy signal, but we won money. It sounds really fishy, right? So it's not that I want to hide from it, but I also don't want to be able to say, we won a trade here, because we have before. We've seen bars that go down really fast because of news or something. There's a catalyst and the bar goes down. We take profit, and then the bar goes straight back up in the same 5-minute bar and ends up being a green bar or whatever. And I say, we got a sell winner here, but there's no sell signal on the chart. It just seems really fishy. So all of that is factored in. I don't hide from any of my wins or losses. Anybody who's been in my room will tell you that I document every single trade. Matt, who pays to be a part of my room, he is a paid subscriber. He does not work for me. He does not have to do what he does. He writes down every single trade, win, lose, or draw, and gives me the numbers to see if they match my numbers at the end of the month. And he's actually corrected me a few times because, you just make typos. Shit happens where you're typing a lot of stuff into a spreadsheet and you just make the wrong number. But Matt corrects me, and I appreciate that, so that I have the right numbers. I am as forthcoming as it gets with everything I have. I talk to you guys know more about my family than my family does. Um, I'm as straight shooting as it gets, and that's the only reason I don't talk about those losses on my videos, is because I also can't talk about the wins we have like that. Don't use Home Depot to install a hot water heater. Maybe I'll make a channel, the don't use channel. So Angie's list for the negatives. Hi, Jacob. Care to make a prediction on NVIDIA stock? I do on most days in my room. I do a daily call. If you want to come in for $5, you can come into a single daily call. And I need to move my stops to 210. We've hit 260 here. I don't know why I'm jabbering and not doing what I'm supposed to be doing. So stops to 210 here. Sorry about that, George. So you can pay $5 if you're not in the room. I don't know if you're in the room or not. Sorry. If you're not in the room, 1 second, guys. Hello. Yep. Thank you. Bye. Sorry, I had to let the painters in. You can pay $5 or $20 if you want a whole week of calls, but you can come into a call for $5. You can ask about any stock you want, and I'll give you a detailed breakdown of it. I just can't do it here because, one, we're in the middle of a trade, so switching to a different screen and going through all that is just going to be confusing and hard to keep up with everything. But yeah, I mean, if you want to do that, I can definitely give you my thoughts on where they're at on NVIDIA. Okay, we're at 270, so we're going to move our stops to 220. And I'm actually going to take half here at 270. So we're going to close a second half of our trade. Now, that doesn't mean the whole trade, so we closed one half. Now we're closing half of a half, so a quarter. So I always say close another half of remaining if you're in the room for 270. And I know we haven't hit the HVL level, but they're kind of slowly grinding, which means when they do hit it, they can bounce really sharply. So if they flash down and up, you can miss all of that. So we'll just take it a little bit conservatively, take a profit here at 270, and then put our stops at 220. So that second quarter was a 50% win. We got 90 cents on a $1.80 trade there. And our stops are above our first take, so that's good. This will be a decent trade. It's been a slow one, but a good one. And this is what you call controlled selling. So one of two things generally happen. They get to this high volume level and they absolutely rip it because it's controlled, or they controlled it down to here to get the longs on a bounce, and then they rip it to the downside. So when you see controlled selling, that's a setup for one side or the other. You don't necessarily know which, but that is what it is. So actually, give me 1 second, guys. I got to lock up my dog so she doesn't eat the painters. 1 second, I'll be right back. All right. Sorry about that, guys. Then you should have refunded me, Jacob, after 3 days of the yearly indicator. Still waiting for that 30% refund, by the way. This is Keith Hatton, guys. Keith, no question, I did forget about the 30%. I have a lot going on in my life right this minute. But then you filed a complaint with the bank saying that I gave you a faulty product. You actually had the monthly indicator for 4 months. Then you switched to the yearly. Then you told me you didn't follow the rules, blew up your account, and then wanted a rebate or a refund. So we've talked about this, and now you come on my live stream and try to do that and make a comment. I'm going to call you out. So that challenge you put to the bank will fail. I have all the documents on that. And I don't appreciate that at all. All you had to do was say, hey, you told me you refund me 30%. I did forget. You're right. You're not getting it now. If the challenge fails, then I will still honor my word and give you that 30%. But all you had to do was say, hey, you said you'd give me 30% and you didn't. And I'd have said, you're right, Keith, I absolutely forgot. My bad. And I would have done it. But you went to your bank and lied to them, told them you got a defective product, which you can obviously see isn't defective, which you told me wasn't defective, and told me exactly what you did. If you want, I'll put your comments up here for everybody to see. You told me you made the mistake, so maybe look in the mirror, Keith, and maybe take some ownership of what you did before you come on my podcast or my live stream and try to act like I'm some kind of jerk. They are bouncing off the high volume level. We still have our stops at 220. I did not see what price it got to. I should probably move them down. Hopefully you guys did. I do apologize. I had to let the painters in. Do you use the GEX levels for profit takes? Not generally. They're just kind of lower level areas where you might see some support and resistance. The high volume levels and the put supports, those are the areas that are important. I understand the 40 to 50 cents on the options. How do you establish the initial stop on the SPY price? So if we look at the SPY right now, let's say we got a long trade. It's 590.40 basically. It's going to move, obviously. We'd say 590.40. My stop would be 589.90. About 50 cents on SPY price. What kind of dog do I have? I have a Rottweiler. She almost ate the mover yesterday. It was kind of funny. Not because she almost ate him, just the reaction. She's really sweet. But if you come into the house unannounced, and I had walked out and met the guy, told him to come on in when he was ready, forgot my dog was out, and he came in without saying anything, and she went toward the door. I never seen a guy that big move that fast. He got back outside in a hurry. It was funny. Does NVIDIA earnings influence how you trade today? Holding trades overnight. Thanks. No, it would not. If I had a trade overnight, no. The only thing that would influence, so let's say I was trading, say, NVIDIA or NQ or something that's probably going to move. I mean, they'll all move with NVIDIA a little bit, but let's say I had a long with NVIDIA, right? And they're going to do their earnings after hours. And price comes up to here, and I've got profit in my hands. I would close some. Depending on what setup and what targets and what things I have going on, I would take some profit in a lot of those instances where that way if this happens, I don't get totally crushed. And if this happens, I still have part of my trade to collect on. So that would influence when I take profit or something like that. But if I'm just in a trade because I have a really good setup, I'm expecting that setup to follow through because the actual tone of the earnings don't matter. Meaning that if the earnings are good, price doesn't necessarily go up. Don't let that jerk get you off your game. Oh, it won't. It's just silly. Kevin Stowers Jacob is very fair. I was in the room. I could not keep up. He refunded. Then I saw the product and knew he would honor his word. Love the bot. Good work. Thank you, Kevin. I appreciate it. All right, they're coming back to test this high volume level. 0 DTE. Let's see if they can get through. If they get through that, pre-market lows next, 589.50 will be a very big level. If they get through that, then we're looking at 588 as the next target. And let me move over some here and just see. Yeah, it makes sense. 588 right here is going to be this consolidation point that they had in the after hours from yesterday. What is this? The 27th. So there's a ledge here of resistance or support. That makes sense that that's a high volume level. But after they break the pre-market low, there's not a whole lot to hold them until they get down to here. All right, so they've actually touched the high volume level and are now bouncing. 230 on your stops, by the way, guys. We did hit 280 there on that move down. So in general, they came down tested, then they came down actually touched. So that's what we call a trap. And now they're going to likely test the 21 in VWAP. So what they did here, this is how they get a lot of people to stop out really quick. So they come down and they get real close, and then they bring it back up, make everybody feel like they're going to bounce. They come back down, actually touch, and then give you the bounce so that these folks who went long get stopped out on the move down, and then the shorts get out because they think that this is over. All right, we're back to 250 here. We'll see if this does look like a pretty decent reversal candle so far with about 18 seconds left. We'll see if they can follow through. So one candle does not make a reversal. It makes a reversal setup. And they need to now follow through to actually make it a reversal. But again, this gives you something to trade off. So if you're a reversal trader and they hit the high volume level and gave you this kind of candle, now you have a stop, the high volume level or just below that, and you have targets up here. VWAP in the 21 would be my first target. And then after that, just depending on what happens, the pre-market high and the actual market high. But those are things that when I talk about a setup, those are the types of things you look at. You got a reversal candle. I don't know if this is on volume, and I'm not trading it, and I'm not asking you to trade it. I'm just telling you when you're looking for a setup, you're looking for a major level to hit, a bounce, and then some kind of follow through that you have now you have a place to trade off of. All right. See if we can get a little follow through here and make this a real winner, a real big one. I see one heck of an inverse head and shoulder pattern on SPY forming on the 1 hour. Thoughts, trap, opportunity. Um, on the 1 hour, probably something like that. I know they've made a couple spike lows, but no real lows, so I would venture to guess you'd have that. I would want to see them test this shoulder more, and they've already come up too high personally. I don't trade head and shoulder patterns, but I believe, I don't even study them that hard, but I believe you would want to see them hold here and give you a pullback at this point. I mean, they did a little here, but I would think you'd want a little deeper and then the breakout. And if they fail, you know, this is a big breakdown bar right here that they're at. This is where they're failing from. So if you zoom out to the 1 hour, this is a pretty easy place to see the failure. You knew they should reject this bar. This is a 1 hour 591 down to, they closed it at 586. So it was a 50-point bar. And then the next 3 bars followed through down to 581. So this is a heavy selling area. It's going to be an area they're going to reject the first time through very often, much like this area right here. They gave you the spike above it and then rejected it pretty hard. So you can see right here you have the sell signal on this 1 hour bar in the pre-market, and they just sold it straight down. And then during trading hours, they came back up, spiked above it, gave you the fake out, and then sold off of it again really hard. So that's how you kind of identify areas of resistance. Now, if we can count it as your shoulders coming off of this selling point, now we're starting to, now they've got to build this shoulder out. So if they come back down here to about 581 again and start up, that would be a much more valid one, I think. Yeah, what's up? Yeah, just so go through the laundry room right there, and the buttons on the wall. Yeah. How confident are you about this being a B wave? Holding, nothing has changed since tariff days. And with how bond yields and Diamond expecting earnings to be a wash, can't see this as a wave 3 of some, can't see this as a wave 3 of some degree. I'm not sure where you're getting the wave 3 part. A B wave would lead into a C wave. But I would tell you that if you're watching my videos, you would know that breaking above the box on ES was bullish. So until the bears can give me 5 down off of a high, the bulls are in control. So I want to see the setup before I see anything else. That's not a head and shoulders in my opinion. Yeah, maybe if they come down now to 581, that would be a better head and shoulders setup off that higher level. But overall, I like I said, I don't study head and shoulders. I don't trade them. I don't care about them that much. But because they naturally occur in Elliott wave, so if you got a 1, 2, 3, 4, 5, then you have an A, B, C. This is your head and shoulders here, and then you go back up, and then the inverse also is true when you get a pullback. So you have You have this ABC, and then you have a 1, 2, 3, 4, 5, where you have your inverse head and shoulders right here. So they just naturally occur, so I just trade off of those levels. I don't necessarily look at it as a quote-unquote head and shoulders. They're basically the same thing, but might have different requirements. Like I said, I don't study head and shoulder patterns. Not to say they're not valid or that they're not something to be traded. It's just that I don't study. All right, this is their fourth test of this high volume level. So it looks like the bears want to break this down. And if they do, they should follow through pretty strongly. But the bulls are defending so far. But generally what you're going to see in these types of situations, especially with this controlled selling, is if the bulls are going to go, they're going to go. So if they keep coming down here and testing this, the breakthrough could get, down to this level pretty quick. I told my room yesterday, yesterday was Tuesday, yesterday that off of the high on the SPX, it did appear to be a 5 down. And sometimes when you get the ES clutter out of there from the overnight trading, you can see a cleaner path. Okay, there's the break of the HVL, and they're kind of, they should pause a little at 589.50. If they blow right through that, then 588 is very likely the next target. Or are they just going to spike and reverse it? You'd like to see some acceleration in this or the next candle, if you're bearish, which we currently are. We're going to move our stops to 240. Again, guys, remember, if you don't have the indicator, 30% off your first month. The code's on the screen, monthly 30. And the yearly is an incredible deal. I never give 10% off, or I rarely do. I shouldn't say never. That's not a real statement. I rarely give 10% off of it. I'm doing that because I'm moving, and I know that my content's going to be light for the next week or so. So to kind of give something back to you guys, I did give 10% off there. Assuming your reference to they are large hedge fund companies. Yeah, I mean, the market makers, hedge fund companies, things like that. So, your market makers, when you go out and buy or sell options, the people on the other side of that, sometimes it's you and me, but the people selling options more often than not are going to be your market makers, meaning they have the capital and the size to trade. And they're looking, so what they're looking for is they're looking for the edge of being able to think of them like the sports book. They don't care who wins the game. They're looking for the small edges of change in price. So they're looking for the very small wins at very high scale, if that makes sense. So 10 cents at 1,000,000 times. So when they're off balance to one side or the other, they have to hedge. So when the whole market gets short and overwhelms them, they have enough capital to do what they need to do. But when everybody's on the same side of the tape like this, and the market starts to do stuff like that, they can't just be on the other side of the tape going, yeah, we'll keep selling them to you and taking the L. They have to also start buying puts. So they're buying them up from anybody that'll sell them. And that continues to drive price down and continues to raise gamma, which creates gamma squeezes. So when they have to hedge, they continue to sell and buy at the same time, just looking again for the edge to keep themselves balanced. And that causes waterfall effect to the downside. To the upside, it squeezes. When they get too much of the tape on the green side, like this, then the market makers have to buy calls because they are off balance, and it creates squeezes. So when I say they, I'm referring to the folks who mostly create liquidity in the market. And then when they dry up and there's a liquidity problem, in other words, there's no one else to buy from, that's when you see the market really, really go bananas in the opposite direction. Liquidity problems in the market create really, really big problems. Market makers are the casino owners. That's a fact. All right, guys, we are at 320 here. So 320 minus 50 is 270 on our stops. So there's the acceleration bar. I told you when they poked through, you wanted to see acceleration, and the current bar where they poked, so you had two options. They wanted to see them break through and accelerate on this bar here or the next bar. Here's the acceleration bar to tell you they're breaking through. I told you they should get here quick and pause. Now they're pausing. Now, if they break this, then we should hit 588 in a snap. That should happen quick. Monster day today. Hopefully you guys are enjoying the day, making some money on these trades, learning a little something, learning about my move and what I'll stand for. With the wicks, does it show waning momentum? No. So I assume you're talking about these downside wicks. So I talked about that earlier. It shows controlled selling because they're having wicks and then continuing to push past those wicks. So you get a wick, a bounce, a wick, a bounce, a wick, a bounce, and they keep moving down. So that's called controlled selling. What they want is they want everybody to buy here, bounce it, trap them. So that's how they set traps in small day trading type setups. And these are just scoops. And this is not necessarily market makers. This is big money pushers. So they spiked the pre-market high. That's a trap. Got everybody to be long because they said, oh, trend day. Smashed them to the downside. Now they've come to the pre-market low, hit it on the button. And now if they can't break through, then you're very likely going to be in either a failed breakdown back up trend day, or you're going to be in a choppy day that's in this range. There's the bounce off of the pre-market low. We'll see if they can reject this bounce or if the bulls are going to try to make a move here. This is the time for the bulls, though, because if they don't, they're going to come down here, fail, and hit 588 in a hurry, and then they'll have to try to make a move from down there. NQ does not want to play ball on this lit. No, NQ's been strong. It's held up really well, and it looks like a choppy move down. I have it on my other screen on a very small chart, so it's kind of hard to tell in perspective. But NQ's been, I talked about it at the beginning of the video, relatively strong on any move down, and that's a warning sign to the bears that both markets aren't dropping with the same ferocity. Lady in the neighbor sells apples. She always hides the big lots under the counter. If it would be a supply shortage, she's a big market maker. For the apples, she is. All right, looks like the bears are going to try to reject this bounce. If they follow through and break, then 588 is our next target. This is why it's important to know your levels. You know, before they ever got there, I said 590 was the likely target and would be a likely chance for the bulls to bounce. They tried, failed. If they break that, I said 589.50 is the next target. They will try to bounce there. They tried. We'll see if they fail or not. Currently, they are getting squashed a little bit on this bounce. And if that doesn't work, then 588 is the next level. When you're short or long, doesn't matter. Know your levels so you know where to take profit. You know where to trade off of. You know where to look. Now, are these handed to me? Yeah, because I paid for it and don't want to have to figure it out by myself. But you can. I mean, if you just look across at the high volume level, this makes pretty good sense. It's the choppy area. And if you zoom over a little bit, it is, they came down, tested here, came down, tested here again, came down, tested here again and chopped it and then broke out. And now they're back to it. So this is the fourth time they've tested that area. You can tell that they grinded through that area. You can tell that they're buying off of that area. They bought off of it here, and they're trying to buy. They are back down to the pre-market low where they bought back above that level. So you could figure this out. It's not hard to figure out. I have so many things going on. I'm happy to have it on my chart already. I highly recommend Mentor HQ. I don't have any kind of discount code for you. They don't have any affiliate program. I don't have any way to help you on that. But if you want to get it, their levels are really good. Don't mess with the market maker in prison. You'll get shanked. Yeah. Or if you mess with them and win, you get to be the market maker. Kill the boss, be the boss, but you must not miss. In my room, James brought up a good question. He said, can I use the 10% off of the yearly and still get the 50% discount on TradeWaves Academy? The answer to that is yes, you can. So you can get 10% off of the yearly, and if you do that, I'll give you 50% off of TradeWaves Academy. Remember, these coupons do expire after the live stream, and given how we're trading today, after this trade, I may stick around to see if we get a long reversal. But if we don't and they start to trend down, whenever we stop out will probably be the end of the live stream. Remember, you don't want to trade against the trend. So the reason it's called IWJ Pivot Point Pro is it's looking for reversals in the market, pivot points. And, you get this buy off of yesterday's high. So it came in, reversed off of that. And then they spiked through the pre-market high and reversed. All right. And now they're at the pre-market low and they're trying to bounce. But if they fail here, that starts to create a trend day. And as long as every bounce holds the 21 in VWAP here, they will continue to push down. And because of how the indicator works, it's looking for reversals. Well, if you have a trend day, what kind of reversals do you generally get? The answer is none. I'll save you some time there. You get small bounces. So on these bounces, what happens is the indicator says, wow, we're way oversold. We're at support. And we're seeing a little bit of a bounce here. This should be a perfect place for a reversal because it's really hard to program in the trend day parameters because it can still come back up and tag and then continue to trend. But the likelihood of that becomes much less, and those wins are small. So we don't take those trades, which is why I have the training video on trend days and how to spot them and how to not blow up your account trying to trade against them. So once we start to get into a trend day, unless that trade happens to be in the trend direction, which right now it is, at some point, this is going to tell us buy. But we've broken through two major levels of support here, which is starting to tell us that buys are not going to be the answer for today. So we don't want to trade against that and blow up our winnings. While we're waiting to see if we get to count more money or we've counted all of our money, feel free to fire questions away, guys. We can always do learning and training and anything you guys want to know or have questions about or whatever. I'm happy to, if I can do it on the screen here without having to change too much since we're in the middle of a trade, I'm happy to answer those questions and go through any of that. Is RTY green? Their Volt is green. Yeah, I guess we're only it seems like we're down more than 11 points. So I guess that's not the worst thing I've ever seen. Oh, no, it's down 15. Never mind. Just didn't update. So one thing you want to look for is you want to look for supporting evidence. So what kind of supporting evidence do you want to look for? Well, if you think the market is going to continue to the downside in a trend day, you want to look at things like the RTY. Is the RTY also red? Yes. Is the Dow red? Yes. Are the Dow Jones Transports red? Yes. And are they red on pace? So in other words, ES is down 0.25%, NASDAQ is down barely, 0.1. Are the transports in that neighborhood? Yeah, they're actually outperforming to the downside. Okay, there's the break of the pre-market low. If they can follow through here, we should see acceleration. Are the banks struggling? Yes, they're actually leading over the transports. They're the most down of those staple things that we're looking at. And when the banks, the transports, and RTY are supporting downside stuff, that's a good thing. They're the leaders here. So that does support more red bars coming. If any of those were green or let's say close to green or more around the NASDAQ levels of flat, that would be a little bit of a warning of maybe we're not going to see some. And NASDAQ being flat is a little bit of a warning that maybe the downside's good for today, but limited. Are the staples like the bubble stuff, like Mag 7, are they supporting downside? Well, you have SMH is red and NVIDIA's slightly red, but NVIDIA's staying more on that NASDAQ level. Meta is actually green, so barely, but green nonetheless. But the rest of the staples, except for Apple, are all red. So yeah, you are getting downside support here. It's hard for the market to move in a direction if the Mag 7 is not really part of that direction. If the whole market's green and the Mag 7's red, it's really hard to rally, and vice versa. If the whole market's red and the Mag 7's green, it's really hard to drop. So seeing that most of the Mag 7 is red is good. Gold and silver are red, which is a little bit all in all, it's not a big deal. But you would like to see them be green on these types of days. They're a little bit inverse to the market in most cases. Not always. Not always. You can definitely see the market and gold and silver green and the market and gold and silver red, but typically you want to see them a little bit inverse to show people are going to defensive stuff, right? So when the market, when the big guys fear the market is going to move down in a major way, they run to defensive things like gold and silver, well, metals and things like that. The 30-year is back at 5. Again, I told you this is a major number. Being at or above 5% is a big deal. It makes the Fed worry. It makes the banks worry. It makes the stocks worry. Anytime we're above 5, that is when the market tends to freak out on the 30-year, especially when you have 2 yield uninversions recently, which are pretty good predictors of recession. Why don't you like trading the futures versus the options? Because I've traded futures for 30 years or options for 30 years. I'm extraordinarily comfortable with them. I definitely understand the advantages of futures. But I just never wanted to sit down and learn all of the math of it, to be quite honest, and start kind of from, not from scratch. I mean, I understand trading, but futures are a little bit of a different animal, and I'm just comfortable with this. But it absolutely 100% works on futures. People use it all the time that way, so that's just why I do it. It's more of a can't teach an old dog new tricks. Can you look at the NVIDIA chart? When we get out of the trade, maybe later, I'll do that before we sign off. George asked for that too. It's just hard to be in another trade when, or in another chart when we're in a trade, because I like to keep track of where we're at. Things move quickly, and I need to keep people updated on things. I probably should have moved stops down, honestly. Let's see where we're at. No, we're still at 320, but they spike lower. So, oh, there you go. They hit 330 here. We can move them to $1.80 or 280. I'm sorry, not $1.80. Stops to 280. These are the days where you've booked a really, really nice win, and now you just get the popcorn out and see if the murder show can happen. See if you can get a horror movie, especially when you're on the short side. Should see accelerate, so they can back test here. They broke through, so a back test isn't a big deal, but you don't want to see them get back above this 590 level. They start to do that, it's going to start to look like the bulls are going to spike this low and then reverse. So this 590 level starts to become important. The next live stream will be from Washington. That's kind of crazy. Sad, this is the first time I'm truly leaving a house. When we left to travel for 2 years, we still own the house and rented it, so I've had a feeling we would come back. But now I know we're selling it. You don't think about things like that where, you had your kids and stuff. But on to bigger and better. I'm showing a sell signal on the daily chart that I haven't been stopped out of. Can you cover that analysis? A sell on the daily is a solid early sell signal. You might get a sell stop on the weekly if that's the case this week. Those build out. So obviously sells start somewhere, right? So they start on the 1 minute chart, then the 5, and then the 1 hour, 4 hour daily and weekly and so on. So if you get a sell on the daily chart, that is the start of reversing the weekly chart. So some people use the daily chart. It's not a horrible chart for swing trading. I just prefer the weekly. I knew you'd be back to the Great Pacific Northwest and your wife's family. Great decision. It is for my daughter, that's for sure. I find it depressing up there, but she's happy, so. I know it's a little bit crazy, but have you checked the theory where full moons are bullish and new moons are bearish? So there's a lot of astrological trading. You guys know I like David Frost, who passed away. My strategic forecast, I always liked what he did. He's a different type of trader than me, but still very knowledgeable, very good. He always talked about those as tinfoil hat events, and they had their merit in times of reversals and things, but not personally my cup of tea. But yes, I've definitely heard that stuff. Would you not add puts back if we break decisively the pre-market low? No, I mean, that's just not how I personally trade. You are certainly welcome to trade your style and your philosophy. No state income tax in Washington? Yeah, there's no state income tax here either. So I'll still keep my business licensed here for other reasons, but that's not the advantage, unfortunately. Bulls are giving it another shot here. They spiked the pre-market low, so they did the same thing on both sides. They spiked the pre-market high and failed. So far, they've spiked the pre-market low and are retracing here. So it will be interesting to see if they're able to get through 290 here, or 590, 590, and start to bull back up. We have not had any test of the 21 recently. So you can see they've gotten below it and never really back tested it at all on this move down. So a spike up here to 590.50 or so would be a first test. VWAP is moving down with price, which is a good sign. So VWAP can do a few things. Obviously, it can move down or up with price, but sometimes let's see if we can find a spot where it flattens. So there are times that, I thought there was one back here somewhere. So you can see price continues to move up here pretty strongly, and VWAP stays not flat. Obviously, it's angled up, but it's certainly not moving strongly up, which tells you that price isn't getting bought with as much volume up here because it's volume weighted average price. So if they're buying tons of volume up here, that would bring the volume weighted average price up strongly, which means they're going to come back down to it, which they did. So VWAP moving down with price in a decent way here, not not getting too separated, where it's same scale and it's not nearly as separated as it was down there. It's never going to stay exactly with the 21 because the 21 moves just on price itself, whereas VWAP moves on the volume of the price, how much volume is bought or sold at a particular price. But it's certainly not outlandish. But going back to test it certainly would not be an uncommon phenomenon. Okay, so we got a buy signal. So we are going to take profit here at 293. So let's go ahead and close out. And then we'll see if we can get the call here. Price doesn't move too fast on us. So I was getting the stuff done, and by the time I got to where I wanted to get to, I don't like where price is sitting. That doesn't mean this is not a valid buy. If you guys want to take the buy, take the buy. I am not going to because it moved too much. It was at about $1.60 when I looked. It is now at $1.72. 12 cents is a lot. That's almost 10%. And it's really close to the 21, which a back test here and fail would not be uncommon on this kind of day. So I personally am not. Trust the indicator, though. I'm not telling you not to take the trade. I'm telling you I couldn't get in fast enough for a price I liked. Had I got in at 160, I would have been happier. But when it got to 172, I was not excited about that. So I'll stay on here until this trade kind of peters out. Just know that I didn't get the price I wanted because it moved too fast because I had to close out the short, then get the trade pulled up, then try to get in and get it all set up, and that takes time. And unfortunately, price had moved about 12 cents, and I didn't like that. So do what you want to do. Run your trading plan. I always say trust the indicator. But I will also always say make sure you get in at a reasonable price because, if you're getting in, you're at one resistance level here, and there's one right above it as well. And price, the buy signal came in back here, and then it ran up 12 cents. So sometimes you have to use a little bit of common sense, and that means sometimes you'll miss a trade. But we've had a great day. I don't need to give any money back if I fail. And if I miss some money, that's okay. There'll be another trade soon. So we'll stay on here for a little bit longer. Just keep that in mind. If you want to, enter the trade now because you're getting a better price, that's up to you. That's not kind of how I'm going to do it. Hi, buddy. Hi, buddy. I am live streaming right now, so I just wanted to say hi real quick.
Okay, say hi and bye.
Hi, buddy. How are you? Yeah, I see you.
Okay.
I love
He's
you,
in a
buddy.
better mood today. He just freaks out if I keep him in sleep, but he's doing good.
Good. I'll call you in a
Good
little bit.
eyes, good luck. Bye.
Thanks. Bye. Sorry about that, guys. Had a FaceTime from the kiddos. Just wanted to say hi real quick. Would you get in when it retraces? So that's a great question. So from a trading, just kind of, what's the word I'm looking for? Knowledge standpoint. I don't know if that's the right word, but anyway. So if it did this and started back up again, that wouldn't be a terrible entry. Generally, I'm a once price has gotten too far away from a good entry, I just kind of wait for the next one. But it certainly is not a bad strategy if they, test this low, come back, test the pre-market low area, and then start back up. So not because you get a better stop, right? You have weakness showing. If you enter right here at the pre-market low, you're at support with you can have a really tight stop on it below this low. Obviously, you'd want to be out. They are giving you a long stop now, so I'd be a little concerned with that if it closes with a long stop. But that wouldn't be a terrible area to look for a reversal and try to get in if you want to take the trade. But I'm a guy that once I miss the trade, I'm not going to try to necessarily finagle the trade. I'm just going to go ahead and wait till the next one. And let me be 100% clear. If we were just sitting here, let's say we had stopped out somewhere, we had made money, stopped out here, and I was waiting for a long, I would have never turned this down. I just couldn't get in fast enough. Sometimes that happens and you miss trades. It's not that I don't trust the indicator or wouldn't. However, we have moved below the pre-market low, and now we've tested the 21. So now I'd be very skeptical on longs, honestly, because this is starting to look like a potential trend day down. If they come back and break this low, they have to break this low. But if they do that, then that starts to look like a trend day, and so I don't want to try to trade against that. And again, guys, does that mean I can miss trades? 100%. But I'm not here to win or to make sure that I don't ever miss a trade. I'm here to make sure I get good trades, and I just didn't like the setup once price got to where it got. I was just too far behind on the trade. That's all. So that's basically a perfect tag of the pre-market low. If you're a person that wants to take that setup, it's certainly not a horrible setup by any stretch. Does baby Link like the new house? We're going to be in the RV for a minute. Her dad has hookups at his house. And he's got a big property that the kids can run around on and stuff, so we can kind of stay out of their hair. And we got to find a house or build a house. I haven't decided what we're going to do yet. It just depends on what we find that we like. But he struggled for a while to adjust. He's a creature of habit, and all of his routine got changed. So he struggled the first week or so, but he's settled in now and seems to be doing pretty good. If they do break this low right here, I will likely, I'll see what they do for a bar or two. If they maybe come down here and try to give us a bounce off of this in a long, I may stick around for that. But I'll probably call it. And there's a couple reasons. So think of trading as a business and understand how to protect your business. One, we have now broken the pre-market low, although not by much, back tested. And then if we break again, that is evidence of a trend occurring. So I don't necessarily want to trade against that unless and only unless they come down into this high volume level and bounce and they give us a long single there, because this is a level you would expect a bounce from. It's put support. So I told you before the day started, The market makers will want to stay between this level and this level up here because they don't have to hedge in those levels. They're basically on balance in those levels. So if you got a buy signal off of here, that would be worth exploring if you want to do that. But other buy signals that kind of come in here anywhere else, I would treat as kind of junk, because you do have the chance to establish a trend day here on a break of this low. So I personally will probably end the stream if we don't move fairly quickly down into here and get a long. For a couple reasons. Personal reasons. I got stuff to do around this house. And then also the trade setups aren't going to be as quality, so there's no reason in putting my capital at risk when we're getting into a spot where longs can be eviscerated. Now, again, they still have to break this low to establish the trend. They can still back test here and go. That's certainly a possibility. But those are things to think about when you're trading. Every trade doesn't have to be the next big thing. I think we'll end flat. Market makers love that. They do love that. They love to give everybody a chance to make money, but if you didn't, at the end of the day, you all got killed. The longs had a chance to make a little bit of money, not much. The shorts had plenty of opportunity to make money, and then they close back flat and kill everybody. Don't forget, guys, those coupon codes do expire when the live stream expires. Actually, about 30 minutes after. I do got to give everybody access who signed up and make sure that everything's set up properly for them. And then once I do that, I turn the coupons off, and you'll no longer be able to get those discounts. So if you like what you saw today, it's 30-day money-back guarantee. You have an opportunity to test it out. You don't even have to trade it. So if you're thinking about it, my suggestion, and of course I get it, it's my product and I want to sell it, but my suggestion would be try it, because you can just put it on your chart, watch it for a month, and you don't have to trade based on it. You can just watch what it does. And if you don't like it at the end of a month, then you can just get your money back. And you never risked any capital. You just watched it. Or you can paper trade it and try it out, try to follow the rules and see how you do for a month and say, oh, this didn't work out for me or whatever. So I always encourage people, go ahead and try it. That's why I give a 7-day free trial to my room. People are like, well, what's it like? I'm like, that's why you have 7 days to get in there and make sure you like it. If you don't like it, it's no big deal. I get it. It's not for everybody. But what do you have to lose by trying it? I think that most people who use it will tell you it's a pretty solid tool and a pretty good trading edge, is what I would call it, and helps traders quite a bit with that. So they did break that low. So now we do have trend day parameters met, as long as they stay below the 21. If they stay below the 21, well, VWAP technically, but the 21 is more accurate. As long as they stay below the 21, which is the blue line on the screen, that not the horizontal blue lines, but the moving average blue line. As long as they stay below that, pressure is down and the bears are in control of the short-term market, just the day market. How can I see your live streams? I do them every Wednesday for anybody like this. And then every day at 10, I do a private one for the people in my room where I go through all of the counts on ES and NQ, and then do all of the Mag 7, gold, silver, Bitcoin, and then any charts anybody asks for. I don't do everything every day because it's just repetitive. It doesn't need to be done every day. But if somebody says, hey, you didn't do Apple today and I'd like to see Apple, then I'll do it. Or if there's a big move, tomorrow NVIDIA will have earnings, so I'm sure we'll definitely dig into that one today. And then tomorrow, I like to see where the chart is before earnings. And, we can do that actually, since we're not in a trade. I'll do that here in a second. I like to see where the chart is before earnings and make a not, I wouldn't call it a prediction, but tell you what, no, I'd call it a prediction. I guess that's what a prediction is. Um, Tell you what I think the most probable path is and go from there. And then see what it did the next day. And I think I do a pretty good job of hitting those earnings calls pretty good. People in the room can vouch for that, though. Of course, I'm going to say I do a good job. But if anyone wants to vouch for, Facebook or Microsoft or any of the ones we've done recently that were, I thought, pretty spot on, you're welcome to speak up in the chat. But we can do NVIDIA here real quick. But Christian, I do a closing call every day for my rooms. I do a midday call. The closing call is quick. It's like 5-10 minutes. Just recapping what happened in the counts, where we're at, if anything changed major between the midday call and the close, just to make sure everybody's on the same page. The big one is the midday call at 10 a.m. Pacific time in my room, and that one is private. Does FOMC meeting minutes usually have a big effect on market volatility? Excuse me. The answer to that is sometimes. The minutes themselves aren't. Everybody knows what's in the minutes. This is not going to be. All they're doing is saying what Powell said at the meeting and then announced to the press. They're just saying it on paper. So they already know what's in the paper. But what they do is, what the media likes to do is, when those minutes come out and the market does move, they like to find an excuse and say, oh, well, they really said they were not going to cut rates in the paper, even though Powell said we're really not going to cut rates. To me, it's all smoke and mirrors. It's just a catalyst. And if the market is set up for a big move on the day the minutes come out, then yeah, you can see a big move. But if it's not set up, generally, they're pretty lame. Good afternoon, cats at home. You're a lot late. You've missed all the trades. Okay, so let's do NVIDIA real quick since we're not in a trade right now. Let's zoom out so we can get a little better look on NVIDIA. Let's do 3 hour. Actually, I'm going to do a different chart because I don't like doing it on this one. And back to the 5 minute. And let's go F11. Let's go here. Oh, I asked my computer for too much. There we go. Come on. So if we look at this setup here, I want to see where we're at. They've got to be right around the, I'd say 1618 or so. 1382. 1382. Okay. So it would not be alarming to see him backtest this zone right here. Let me get my arrow here. What you have happening right now is you have a pretty clear 3-wave move so far. A, B, C. They technically could have 5 up in this C wave as well. I'd have to dig in a little bit to see, because this could possibly be a 5-wave move. So this could be a 1, 2, 3 as well. So pulling back here off the 1382 would be normal in a wave 3 or a wave C scenario. They're also at major resistance. I think that any move up is contained by this area right here at 146 or so. In most cases. But the fact that they're coming into this major breakdown zone right here, getting through that on their first shot is generally not the most probable path. So does anybody know what the stock or the options are predicting? Like probably an 8 or 10% move, I'm guessing. So let's just say it's close to 10. That's 13.5 points. So that would put them at 123 or so. 123 is a gap fill, and the 764. Actually, it's not quite that low. It's right here. This gap fill. So this gap fill, backtesting this would be very, very reasonable. So they broke out. So what happens in price action? You can see it time and time again. I can literally show it to you 1,000 times. We'll look at it right here. You break out, you pull back, okay? So they told you this level here, super important, right? Because they failed. They pulled back off of that level. So you pull back, and then once you break through that price like they did here, they gapped above it, they're going to come back and test this price. Mark it down. It's a fact. They will come back and test this price. Now, does that mean in a day or in a week? No, it can be as long as they want it to be. It can be several months, as you see right here. They break out. And where do they pull back to? Almost exactly that price. Then they resume their uptrend, right? So they broke out over this wall right here. They have not back tested it. So a 10% move puts them right back at the top of this. So I think their move gets contained by 122 to the downside, and that would be my preferred path. I think that a spike up so I could see them either closing the day fairly strong up into this 140 area and rejecting, or spiking earnings into that 140 area and rejecting. You know how they do it, where you get a spike up and then the candle down, whatever. That would be my preferred path. If they're going to be mega bullish, I still think they can't get through 146. But what's 10% up from here? That's 13.5, so that's 148. Yeah, so I would say this area here would contain any bull move. You have all of these rejections up here. This is going to be resistance. My preferred path is down to about 123. And then the secondary, if it is going to be bullish. Now, I don't play earnings because to me, it's just a catalyst and you're gambling on a one-day move. But if I had bought NVIDIA down here somewhere, I would definitely take some profit here and leave a runner in case they do run it up to 146. But I think that my preferred path is that they come down to this 123 area. And then what they do there, that's up to what comes next. This is a perfectly viable path right here. But so is this. So the first thing I would look for is 123. The second thing, if they don't do that, 146. So the primary is 123 to me. That's how I'll say that. Oh, this is ES chart. So hopefully that helped you guys out who are looking for NVIDIA. You're always going to have two paths. That's just the way it is with Elliott Wave. That's the way it is with price action. But my preferred path is 123. So down is what I'm saying. With the caveat that playing earnings is gambling. Other than live streams, you have tutorial videos explaining the indicator. Yeah, you get those. I mean, the live streams explain it pretty well, but you get those when you purchase it. So again, you have the 30-day money-back guarantee, so you can buy it. You can go through the indicator and how it works and how to set it up, all the stuff. I can give you a quick overview of it. I mean, that's all you're really going to get anyway. I'm not going to get down into the depths of it because it's proprietary, but it's a price action trading tool. So it trades off of key levels, high volume supports and resistances. It looks for criteria off of key levels that meet reversal needs. So it's forward looking instead of backward looking. It's not waiting for a moving average to cross where, let's say you're wanting to, let me see if I can find a quick, let's say you want this to get bullish. Okay, well, it's looking for this key level, the pre-market low, to provide a chance to get bullish, whereas some other indicators may wait for this 21 to cross back over VWAP and you don't get into way up here somewhere. We're trying to get into the highs and the lows off of key levels based on some moving averages, but those are lightly weighted. More heavily weighted things are things like momentum, volume, supply and demand, price action, key levels, all those types of things. There's about 170 total factored in. There is a formula that accounts for the different weights of each one. Again, volume at a key level might be weighted higher than, say, a moving average. Once those are factored into that formula and it says, okay, we have a green light to buy or sell, it issues a buy or sell, and then it is looking for 7 to 10 ES points. So it's based on futures. And the reason it was based on futures is because after hours trading has a heavy factor in setting key levels. And so it's looking for 7 to 10 ES points, which gets us our first profit take of 20% on a day trade with potential. So it's saying, hey, we should get 10 points here, but we have a chance to get 50 if they break through. We should get 10 points here, but we have a chance to get 25 if we break through, whatever. Just like up here. So we came above the pre-market high, spiked it. It saw momentum to the downside, whatever factors it included in here. I don't know. I don't see those in real time. And it said we should be able to come back and at least test the 21. And if we break through, well, then you have potential for the rundown, right? So that's a quick overview of it. Thank you for all you do for us, Jacob. Wish you were well on your move and can't wait to see you in Washington. Thanks, Daniel. I appreciate that. I love doing it. Trading's a lonely game, so having people to interact with, trade with, help. My favorite thing is when somebody comes to me and says, hey, I've made money for the first time in the market, or this is my yearly return. I've never seen this before. I have a guy who his wife was able to quit working and take care of their kids because he had a new baby, and she took maternal leave and never went back because of what he's learned and what we do together. So all that kind of stuff makes me so happy to hear. It's why I do it. People always say, well, if you're so good at trading, why would you ever share your secrets or do any of this? Blah, blah, blah. Well, I'm not a moron. One, I understand how capitalism and business works. Two, I am not a stingy POS who thinks that I'm the only one who's allowed to make money. Three, me sharing trading secrets does absolutely it's not like it's not like if I give you the formula to Coke, you can go make Coke and then I'm out of business. If you trade what I trade, it doesn't do anything to hurt me whatsoever. So why wouldn't I share the stuff? It's not like it's something that if you had the secrets that I have, the market will change and I can't make money anymore. Or, the people who sell programs like, I guess the new one is like PDF farming or something. So there's like 10 people who figured out how to PDF farm. They milked the whole system. Now they can't do it anymore, so they sell it to you. They sell PDF farming to people, and then when they try to do it, the market's too saturated. There's none of that comes with trading like that. So it's not like I'm losing anything by sharing this information. In fact, I gain a lot. I gain a lot of happiness from hearing the stories. I gain a lot of understanding, empathy. I gain a lot of friends. I've made a lot of friends through this. So I really appreciate that, Daniel. I like doing it. I like the people who are involved, most of them anyway. We had one bad apple today. But that to me is just accountability and stuff. And people are always looking for a scapegoat instead of looking in the mirror. And I learned that lesson when I was very young. I had run my life into the ground and wanted to blame everybody and everything until one day I finally said, hey there, guy, you're the one who made every decision to run your life into the ground. So maybe you should answer to those questions and not everybody else. And that's when my life changed. Big believer in the power of positive thinking and manifestation of things. And hopefully I've imparted some of that on you guys. And I do get angry from time to time. I'm human. but I try to think in the positive way, and I try to treat people right, and hopefully you guys feel that. I always learn from the live streams. Thanks for sharing. That's awesome, Will. You're one of my you're probably my top subscriber. You comment almost every day. You're always there. If I don't have a comment from Will, I wonder if you're safe and okay. You should get one of them badges that says like top subscriber. All right, guys. Kind of slow here, grinding. They're probably going to grind sideways to down, I'm guessing, just based on overall structure here for at least until the minutes and then until NVIDIA earnings. The only long I would entertain, just so you all know, if you're not in my rooms or whatever, is off of this 588 level because it's a high volume level. Everything else to me right now is noise because you do have trend day parameters met, although barely. They are barely met, but they are in fact met. We went below the pre-market low. We went back to the 21 and we came back below that low. And now we've even held the 21 again. So this is setting up for more of this. This is the only area to trade in my opinion. And even then I'd still be a little bit cautious about it. So I think I'm going to wrap it up and get everybody set up on the indicator who got it. If you did, thank you very much. I'll get you set up as soon as possible. It should just be in the next 15 minutes or so. Look for your email. Check your spam. There'll be an email that says you have access. And make sure you have that. Follow the instructions, please. Get the right TradingView program if you don't have it. Make sure you have all the stuff set up. And then good luck with it. Make sure you follow the rules. And you'll be, like I said, you'll be really happy after a year of using it. Even after a month, you'll be happy. But I'm talking big picture stuff. So thank you guys for joining the stream. Real quick, Mahai said, what's the ES equivalent of this 588 level? Let's see, that's about $1.20, so about 12 points, or it's about 5,900. It's going to be about 5,900 or so. It might be like 5,904, I'm guessing, on ES. Thank you guys for joining the live stream. I really appreciate it. Thank you for your patience this week as I get this move done and get back to somewhat normal next week. It'll still be a little bit choppy next week, getting things set up and doing this from a different place and all that kind of stuff, but a little more normal than this week will be for sure. Have a great afternoon, everybody. Don't overtrade this nonsense, and we'll see if NVIDIA comes down to 123. I'll be curious to see what happens. Thanks, everybody.